Felix here, and it's been another one of those days, hasn't it? I thought I'd give you a quick roundup because my chief financial analyst, Tallulah, came up with some really insightful research here today. There she is. And what's going on? But before we get into what's actually going on here and just how far this market is tanking, get your hands on this free benchmark. You want to become smarter, right? That's why you watch this kind of content. So go to felixrance.org/Goldman26. It's completely free. No cats on shoulders included in that one, but it tells you Goldman's top 26 free cash flow stocks. So felixrance.org/Goldman26. And of course, none of the following is financial advice. I mean, who's taking financial advice from a cat, right? I mean, be sensible. So all we got to say, what's going on today? Well, the market is dropping. The market is dropping for more than one reason. There are two big indicators that I want to show you that I'd like you to track and be aware of, because it's a good place to start to see what's actually going to happen here. And you can make money in every market, and I'll show you how I made money today, but it's important to understand the framework. So the cash was dead, right? Everyone's saying there is this TINA, TINA. There's no alternative to assets, to shares. Essentially, you had to put your money into stocks to get that 8, 10, 12, 15%. And now suddenly the Fed comes up and basically gives us 4% returns for holding on to 1-year treasury bills, which was just like, no, they don't pay you any money. Now, 4% is that good or bad? Well, inflation is somewhere in the region of 10%. I know the government tells you it's a little bit less than that. So you end up with a net minus 6%. Is that a good place to start the day? Not really, but it's better than minus 10%. So if you do nothing, if you're just sitting on cash, it's minus 10. If you at least hold onto the 1-year treasury bill or some sort of double A rated commercial paper, you're getting similar 3.5 to 4 improvement. But yeah, better than doing nothing for sure. Now, where is all the money? Remember all that money that got printed, those billions, trillions of dollars that Biden and co spouted at everybody in the world and the Fed printed? Where did it all go? Shouldn't this be fueling a rally? Well, what happened? During COVID, lots of money went into cash. This is essentially cash or, money market funds, sort of the same thing. And then money went back into stocks here. Right, that's the moving back into stocks. That was kind of the post-COVID rally. And now it's going back up into cash. So if it goes up, it means, and I'm covering that here. If it goes up, it means cash. If it goes down, it means it's invested. So normally, going into a crisis like 2008, everybody goes into cash. This just seems to be human psychology for some reason. And then when you go out of it and the market rallies, everybody tries to buy the rally and mistimes it. That's typically what happens. The same thing is happening here. So that's the good news, more cash sitting on the sidelines than ever. So when the rally does come, it'll be powerful enough to say. So money market yields are now at 7-day yields, even 7 days, you get 2.5 percentage points. Imagine that. Tell your bank that you want that kind of return in your cash account. So Russia. Why am I showing you Russia? Oh, it's a side story. Not really what I wanted to show you, but just to show you, where the Russian oil is going? It isn't going to China. Well, it is to some extent, but that's the same as it's always done. It's India, actually. If you want to blame somebody for fueling Russia's market, and I'm not trying to cause any trouble here for lovely Indians, but it's India who's buying the gap. They're the ones who are benefiting from this, so something to think about. But yeah, this is what I wanted to show you, really. The fear and greed index, it's extreme. This is pretty extreme. So that's, generally speaking, a sign to be buying stocks. Now, there's one reason you might want to hold off just a little bit, but it's definitely the right sort of time. I'm certainly am buying stock. This here is, and I talked to you guys about this if you're on the coaching program on the weekend, we talked about the VIX, right? VIX, fear index. A lot of people know that by now, at least if you listen to me. It's sort of what people perceive as the fear index. So if VIX is at 31 right now, it means that the market is expected to sort of go up or down roughly 2 percentage points. And by market, I mean the S&P 500 or the SPX. But normally, the VIX curve doesn't look the way it looks here. Normally, it looks like this, because normally you would expect there to be higher risk in the future, say in May next year, than right now. the moment it's the other way around. The moment we're kind of inverted, and that means we think the now is so freaking terrifying that all market rules are suspended and you can get very, very large, much, much larger than 2 percentage point movements. So that's something to bear in mind. So the madness is definitely here. The loons have taken over the asylum and they are running it and they're quite enjoying it. So until this VIX curve returns to normal, basically there are no rules. that's something to bear in mind. So if you are buying stocks right now, you just need to be aware that you need to have the stomach for it. I think it's a great time to do it, quite frankly, because lots of people are panicking and being fearful. This is when you want to be buying. You don't want to be buying with extreme greed. This is when all the people who are down 70-80% are buying, and I know a lot of people, my viewers, are part of that, and there's no shame in that whatsoever, but just learn from it and be on this side for once. But you have to be able to hold through the madness, right? That's the way it is with stocks. So are we able to hold through the madness? So we did some options trading today, which I did live with you guys if you're on the programs, and some very nice results so far today. We're up about 12 to 27% of our max profit on these trades, which is very nice. If that doubles, then we will probably take profits on these, even though some of these are like 60 to 90-day trades. So you can make a very nice buck very, very quickly. And these trades all have sort of 85 to even 90% probability of making me money. And that's the important part. How does that work? Well, it allows me to be wrong. So say if I look at Netflix or something, and I can pull it up for you. Here, let me show you just as an example, the Netflix trade. So I'm saying that Netflix is trading at $26. My break even is at 30. So let me just take a snapshot of this, because this is important. This is how you significantly improve your likelihood of making money. So this is now stock price, and this here, which is at the moment, what is it, $27 basically. Let's call it $27. It's $26.92. And my break even is $30.12. So the stock can go up more than 10%, 11% or something like that. So it can go up, say, 11%, or it can go down 100%. It can go down to literally $0. And in this wide range between 0 and 30.12, I make my maximum profit, which is, can't remember what that is. At this point, it's $270. So it's about 10%, about 11% return on this. So why is this better than just buying or shorting Netflix? Because if you buy or short Netflix, you start losing money if it goes up 1 cent or goes down 1 cent. You don't have this bonus, this whole 11% wrongness zone where you can be terribly, terribly wrong on the direction by like 11% of what you thought it was going to do and still make money. And that's what makes these into high probability trades. And there is a little bit more to it, but that's sort of the concept of the way we trade. So it isn't black or white. It's, I think it's going to go down, but I could be really, really wrong on this. And I'm often really wrong on it, and I still make money. And I quite enjoy being really wrong on things and still making money, because that was the whole point of it. So it's about risk management. It's not actually about knowing which way it's going to go. We call it largely being market neutral. And that's really the smart way that traders make money. You can't do this with stocks. You can only do this with options. So 2 ways you can learn that if you wish. And that is, if you have at least a 5-figure portfolio, give us a call at felixfriends.org/coaching. We'll have a chat about it. We'll talk through how best to help you. Tallulah tends to handle these calls. She's very, very good at that. Very, very experienced trader. And if you if you're not quite there yet with a 5-figure portfolio, that's completely fine. We get you there. We help to get you there faster. Check out the Master Options program at felixfriends.org/options. It's like 100 pre-recorded lectures. You're going to see me trade live every day, like you would have seen me trade live today. I intend to trade live tomorrow. I'll live stream it. And you can not just learn from the theory and the strategy that I give you, but actually see me implement it, see me make those trades, get those announcements, and you can copy it while you're learning, but the point is not that you just copy me forever. The point is that you'll be able to do it as well as me or better than me. And that's precisely what I teach you. So check it out. FelixFranceLock.options. Coupon code here is Build Wealth. And what are you going to do now? You're going to watch the next glorious bit of insight, aren't you? I know you want to click on it. Thank you very much for tuning in. See you on the next one.